One of our viewers just sent me a real deal that he's considering investing in. We're going to analyze it right here, right now. This deal comes to us from the BiggerPockets community from a member named Jason. I'm not going to give out his full information, but Jason is 53 years old. And I think it's important to know that his intention in buying this particular deal that I'll show you in a minute is to hold on to it for 10 to 12 years. Like I said, he's 53 years old, and so he's looking at a traditional retirement age and wants to start buying buy and hold investments to help subsidize or give him the majority of his income for that retirement. And I mention that because it's important that whatever age you are, experience level you are, whether a deal is good or not is completely relative to what your objective is and your financial position is. And so by knowing this about Jason, this is super helpful in evaluating the deal. So the deal Jason sent me is a duplex. It's priced at $235,000, which is relatively affordable. And it is in the town of University Heights, Ohio. This is actually in the Cleveland metro area. And I'll just share with you guys my screen because I'm going to do a little bit of research about the market. So if I zoom out here, you can see it's just a little bit east of Cleveland. And when I zoom in on it, I'm going to be able to look at a couple of different metrics here. But I will just mention that Jason told me in the submission that he created. And by the way, if you want your deals reviewed, I'll put the link below so you can have deals reviewed here, that it's close to the Cleveland Hospital, Case Western University, and John Carroll University. So this is kind of a college area. What I'm going to look at first here is price point. And just look at the general area and see, most of these things here are in the 200, 300 range. I'm going to look at the forecast, which tells me whether or not our algorithm believes that prices are going to go up in this area. And the darker, the higher the likelihood of appreciation. You can see here down on the bottom where it gets less lime green and more, I don't know what you call that, sort of like the bluish green. That's a higher percentage, 7-8% right now, looking in this downtown area, which is great. I mean, the national average right now is 4.4%, which is good, but anything above that is really good for appreciation. And so it looks like a lot of the fundamentals tell us that this area of University Heights is likely to grow in the next year. Love seeing that. The last thing I'll do before I dig into the specific listing here is hit crime. And I'll zoom in. You have to zoom in further. So what I like seeing here is the green in this area and the yellow is relatively lower crime. And so especially for a college area, there's usually a decent amount of property crime in college areas. You can see that this is actually not bad. I don't expect anything to be all green. That's very rare, especially for an urban environment. So if you see green and yellow, that's actually pretty good. There's a little bit of red here. Let's just see if we zoom out. Okay, so if you see going outside University Heights to this area, this has a higher crime area. That doesn't necessarily mean it's bad, but some areas just have more property crime. I personally like to avoid violent crime. Oh, there's the Cleveland Clinic. That's a very big economic driver, I'm sure. So that's good being there. Okay, so we see Case Western Reserve University over here. So, relatively speaking, it seems like a modest or lower crime area and really good price point. So I like seeing that just in doing my little bit of market research here. If I were buying this deal, I would do a lot more research about the demographics of everything going on. But our purpose here today is really just to look at the specific deal that Jason sent me and see if it's a good one. All right, so let's just look a little bit at this listing so we get a sense of this deal. So first and foremost, it's 4-bed, 2-bath, but this is a duplex. So it's 2-1 on either side. And it's important to know that this rental estimate is for one side of the duplex, but Jason gave me different market rents. He said $1,350 is market. So it might actually be higher than what he was expecting, but we'll analyze this deal in just a minute. But before we do that, I want to just look at some of these pictures and get a sense for the quality. Just looking out here, you see nice grass. It looks like a nice yard. The brick looks in decent shape from what you can see. Nice hardwood floors. Something going on here in the ceiling that we'll want to dig into if we're buying this property. Crown molding, not bad. It looks like a nice place. All right, it looks like high ceilings. This looks to me, just my immediate feeling is that this is in renting condition, that you wouldn't have to do a rehab if you don't want to. You might want to drive up the rental price, but from what I see here, this is in good enough shape. A little bit dated kitchen, but it's still definitely livable. It looks like a pretty nice spot that's been well maintained. Bathroom, again, a little bit dated, but I think a lot of people would comfortably live here. There's nothing that is like jumping out to me as needing a lot of work. Okay, I think this is the second unit. Similar kind of situation. Different theme. Instead of blue, we got a pink old school bathroom now. Older cabinetry, but still, I think it's similar condition. Just doing a quick look. Don't see any knob and tube there, but I'm not a pro at that. But this looks like a clean basement for the Midwest. I'm liking the condition of this property. It looks pretty clean, well maintained on the outside. So all in all, I think this is pretty solid. Before we go and actually analyze this deal, I'm going to look at just a couple more stats here. So it's 2-bed, 1-bath. Again, each side is going to be 2-1, and then we have 2,800 square feet or 2,750 is really solid on a big lot. And whoa, geez, these taxes are super high. 8,500. That's might come back and bite us. But year built, 1956, pretty solid. Overall, I mean, I think Jason found himself a nice property. Whether or not this is going to cash flow, we're going to have to see. All right, so we're going to run this through the calculator. And since I don't want to give away Jason's deal, he's considering doing this. I'm just going to put in a fake address and write deal review in University Heights. This is Ohio. And then I'm just going to put in the purchase price. So it's $235 is what it's listed at currently. I think it's been on the market for a couple of days, 19 days. So let's just assume we're paying full price, and then we're going to put about $4,500 into closing costs. Jason said he doesn't intend to rehab this, at least right now. This is just his strategy, so we're going to evaluate it based on his own strategy. What he gave me was 25% down. He's not planning to live here, and he said he was quoted, what did he put here? 7.5 as his interest rate is what he was quoted. So we're going to do that, and the loan term was fixed rate for 30 years. For our gross monthly income, Jason said that he expects that market rate is $1,350 per side. So we're going to put $2,700 here. That's a good sign. If you've heard of the 1% rule, this deal would beat the 1% rule because the monthly rent of $2,700 is above 1% of the purchase price, which is $235,000. So that's a good sign. But the thing I'm worried about with this deal is these property taxes. Man, it's $8,500 for property taxes is super high. Like, just for reference, I own properties that are worth 5-8 times this amount, and my property taxes are like half of that in Colorado. So I don't know if that's just this area where this specific town has super high property taxes, but this is unusually high. Insurance is low though. I know that about Ohio. There's not a lot of like natural disasters there. So $800 for insurance is great. He said he wants to put 5% for repairs, CapEx, and vacancy, and that he was going to put 10% for management fees. Personally, I pay about 8%, but 10 is still within range. He is planning to have utilities paid by the occupants because it's metered separately, which is super helpful. All right, so let's just check out this deal. And from what I can see here, it is a break-even deal with the assumptions that we made just now. So not the worst, but not the most exciting deal. So $18 a month is basically break-even, 0.3% cash on cash return, any given month, any given year, you might be up a little bit, you might be down a little bit. So my initial reaction to this deal is I wouldn't buy it as is. Now, I buy deals that are a little bit thin on cash flow if I think that the area is going to appreciate. And our algorithm believes this area is going to appreciate. I personally would need to dig into University Heights a lot more to see if I really believe there are long-term fundamentals here. But I will tell you that when you first analyze a deal, it's super important not to just look at this one number and then say, okay, this deal doesn't work. Because I'm going to point out a couple of things. Jason, first of all, said that he thought that the rents were just $1,350 per month. Our estimate at BiggerPockets was actually for $1,450 a month. So you might be able to actually get $2,900 a month here. Like, hypothetically, if we went to $2,835, meet it halfway, then we're talking about 2.3%. Actually, you know what I'm going to do? I am going to do a little bit deeper rent analysis here for everyone. Okay, so what I did was just pull up the rental estimate and just got some more detail here. So we're thinking that the median is about $1,255 here. And it's important, like median is average, but we need to know if this property is average for the area. And it looked like a nice place, like it wasn't brand new. But I think given this, if we look at some of these comps, it's a big apartment, so I think that is nice. We do see I do think about 1,200. What did he say? 1,350. I wouldn't go much higher than that just to be conservative with my estimates. I personally don't like assuming that my rent is going to be way higher than the average. So for me, given what we just researched, I would keep mine at about 2,700 during my analysis. So I'm going to drag this back down to 2,700 and just say that, again, if this was my deal, I probably wouldn't look at it. The only way I would do this deal is if I could change some of these assumptions. So the first is, it's only been on the market for 2 weeks, but if it sat on the market for a little bit and I could get this at, let's say, 225, what do we get here? Okay, it's still probably not a buy at 1.4%. Maybe the seller be willing to give us a rate buy down because 7.5 is a little high. Like if you could get it, find another bank at 7.2, it's still a little bit thin. So to me, I would have to see two things here if I was going to buy this deal. First, to be able to get this cash on cash return to 3 to 4% minimum. So that might be a combination of trying to get the purchase price down to maybe 220, something like that. See if maybe they buy down my rate to 7%. I don't know if the seller would be willing to do it, but that's the whole thing that I said at the beginning about being patient and being disciplined. Because if the seller's not willing to do that, that's their right. It's just not the right deal for me. Might not be the right deal for Jason. And so I would need to see this cash on cash return get to 3 or 4% minimum. And then I would look much deeper into University Heights to see if I thought this was a high potential for appreciation. Because if it's in a great neighborhood that's likely to appreciate, I'd take 3 or 4%. But if it's in just a modest neighborhood, I still wouldn't buy this deal unless it had 6, 7% cash on cash return. That's personally my way of looking at this deal. But I'd love to know what you guys think. Is this a deal you would buy? Is this a deal, given what you know about Jason, that you would recommend? Or would you be patient and hold out to find something a little bit better? Let me know in the comments below, because as I said at the beginning, what is a good deal and what's not is subjective. This is just my personal opinion about this specific deal, given the little I know about this location and what I know about Jason. So make sure to chime in and be a part of the BiggerPockets community and let your fellow investors know how you would interpret this deal. Thank you guys so much for watching. For BiggerPockets, I'm Dave Meyer, and I'll see you soon.